All right, let's talk. Let's talk a little bit about quarter-end markups, and we're right towards the last week of June, which happens to be also the last week of the second quarter of 2017. So one of the things you see often is you see markets move to the direction they have been moving very strongly early in the last week, and we've done that this week. I said on Friday we're going to get this gap up Monday, and here we are. So what does that mean? Well, it means you just need, it's context. It's another piece of context that you need to look at. And where do I see this showing up in the main indices primarily is where I see it showing up. So if you looked at the S&P, which we just did, you can see this in play. Most of the move comes overnight. We open up, and this is right where we're trading, in here again. We've traded as high as, 51.75, which is quite significant because Friday we closed basically at around 58.02. So 58.05 was a key number for the week close, and we did not close above it. So again, you trap a lot of people on these quarter end type moves by getting them involved. This move in the Nasdaq is not new. I mean, we bottomed the last week at 56.42, so we're up 200 points since we hit that bottom back here and tested here. So a 200-point move, and now we're getting into this range where we're starting to clean up again this swoosh that we had on the FANG crash. And so all we're doing is cleaning up this piece of the profile, but we've got this big lid. Don't forget, before we fell, we had been trading pretty firmly around 58.70 to 5900. So you're not going to be able to just go to all-time highs on the Nasdaq here anytime quickly, I believe. So, and then the Dow and we already showed the S&P. The Dow is also up 122 points today, and I want to point that out. But that's still much. It's below its high of 21,480. So keep this in mind. You can see we're just playing in the value zone here, and this is a 60-minute chart. So these wide zones, we're not creating any new areas, but we're trapping, in my opinion, new people into the game here on the quarter end. I think July, being an earnings month and nobody's expecting anything to happen, is going to lead to a lot of good trading opportunities in July. We were pretty slow in June, but probably the most versatile market that we saw all year. So keep that in mind. Also today you're seeing the bonds. The bonds are just running crazy. So something's wrong. Either the bonds are wrong or stocks are wrong. And you can see this in here. The bonds are up to 157.08 as we speak, high of the day. And they've broken out. And we said if they finally close over 156 on a Friday, which they finally did Friday, it wasn't a crazy close. But I will note that if we close over 156, there's that bigger gap still to come on the bond. So I want to point that out again. Be careful here, because now we're getting into, we got to clean up this Trump. We can move very quickly up to this 161.19 level. So keep this in mind. This could be off to the races. A mirrored move here gets you to at least 160. So I wouldn't be surprised to see, if any pullbacks you get to 156 here in the next couple of days, I would get long, and you could put your stop in at 154, which is below, kind of this breakout bar that you saw here. And I would look for a move to at least 160, which is 3 full points higher. So this is, again, a daily chart that we're looking at on bonds. This is going to be my idea. I think we're going to have this squeeze come in the bonds. We may see some type of move down in stocks following that, and then that will be just what we need to trap everybody. So I could see this, again, filling this hole in here up to 161 pretty easily, and that's a big move. That would be a monster move. Matter of fact, that full $3 or $4 would be just huge. So this is going to be our idea, our swing trade for the next few days. If you want to buy some at 157, great. If you want to pull, wait for a pullback, that's your option also. But I would definitely look for this to fill in this hole. The Trump, this is the Trump win where we broke down here at 161. We never did go back and test it, so it would make sense that we'd go back and test this. This would get just enough people trapped on the bonds, and I think that would be a great area to put in a swing short, that 161 to 165. So if you can get that short on that area, that would be your next trade. But this is how I'm looking at the bonds. Again, this is how you need to look at the markets when they give you these opportunities. So buy the pullbacks, look for a move to 161, and again, this is a good way to talk about month-end markups. So they do this because the funds, the hedge funds, mutual funds, all mark their markets anywhere from T+3. So T+3 happens to be tomorrow, Tuesday, and that's Tuesday, and today is Monday, the 26th. And we close out the month and the quarter on Friday the 30th. So a lot of action going on. Keep this in mind. And just wanted to point out month-end, quarter markups and quarterly markups, when they happen at the same time, can be pretty powerful. So we're in the middle of one of those right now. And be aware that things could get squeezed. And that does become a context and a factor into how markets play out this week with the month end. I'm not saying they're going to run all week, but the first couple of days at least, I would be very careful trying to, fade any moves, because this type of markup can be real powerful. Okay, have a great day, and again, thanks for following us at the 5 Minute Trader and the 1 Minute Trader. We'll talk soon. Peace.